we always get that everlasting question of, why did my line not work today? Because you don't realize that the drivers change. The drivers always change. They always move about. Our job is to read the fundamentals and read the drivers and try and match the drivers with the fundamentals. If we match the drivers with the fundamentals, things are a lot better. Now, one of the things that we can do when we're looking at that is long-term charts. The long-term chart doesn't have too many secrets. If we see what the secrets are in the long-term chart, we obviously can identify whether we should be working with the macro buys or the macro sells. We're going to be covering that in Classroom as well when we're talking about macro narratives. Oil is a great example of that today. You can see oil prices are now up at $88.20. Well, we did tweet well over a month ago. You'll probably remember we tweeted Goldman Sachs upside forecasts. We tweeted Morgan Stanley's upside forecasts. Remember, they were all upgrading their forecasts from $80 to $90. Remember that? Anybody remember those tweets? We talked about it in the room several times. Goldman Sachs going up to $80 to $90. Goldman Sachs actually went up to $105, if I remember correctly, and Morgan Stanley went from $80 to $90. Well, if you remember those things, guess what's happened, guys? The price has gone up, surprisingly enough, not in a straight line, but over the course of that macro period, the prices went higher. It's not a surprise. It's not a surprise. It's done what we thought it was going to do, and that's just the way it works. You know, that's the way it plays out, guys. I mean, it's not too difficult to get your head around. But one of the things we've got to remember is there is a macro context to everything we do. We touched on it today on the bond. And the interesting thing is that we already had the bond trade last night, and we already had the bond trade this morning. We already knew what the macro was. And therefore, when people saw a rally in bonds at the same time as a rally in oil, they go, wait a second, how's that happening? Well, because you've now got an idea about macro narratives, you know that bonds and oil and equities can all go up at the same time for a short period of time, and then obviously the rally in inflation starts impacting on the higher bond price and the bond sells off. Pretty simple stuff. But it's only simple if you understand it. It's only simple if you actually get your head around the idea that certain times the fundamentals become the drivers. The fundamentals as in the driving background news that we can't chart in terms of a single line, like the Russians on the Ukrainian border, like the hard talk coming out of NATO or whatever. We obviously recognize that that can be negative for equities. The Fed, tough talk, tough talk, tough talk, but what does the market's reaction to that tough talk suggest? Now, obviously, we saw that that tough talk from last night's Fed was unwound by the markets this morning in the overnight session, in fact, and that allowed us to buy equities. If we don't realize that that's happening, we're going to miss out some of the biggest clues to trading success that you can have. If you're still trading a short-term line in isolation and you never recognize that there is a fundamental shift taking place, you're doomed to making the same mistakes as you always have done. And this is what we've got to try and recognize when we're trading. We've got to try and recognize that the drivers change. We've got to read the news. We can't pass the news off to a line. The line isn't the news. We read the news. We get an overall impression of what's happening. We don't have to read the articles. We just read the headlines. We can skip through the news very quickly indeed. It takes about 2 or 3 minutes in the morning to read the headlines. What do I need to know before I start my business today? What do I need to know that's happening before I start putting in buy and sell orders in the marketplace? Because I need to know it, right? I need to know what's going on. Anyway. So let's take a look at the data we've had so far. Not an awful lot. GfK consumer climate numbers beat expectations this morning out of Germany. Spanish unemployment also beat expectations, dropping to a miserable 13.3%. 14.2 was forecast, so a lot better than expected. But we do have the advanced GDP numbers out of the US at 1:30 today. Advanced GDP, of course, is the early release. It has variables in it. So advanced GDP numbers are forecast as a very, very bullish 5.3%. Not that difficult to achieve on a very low threshold, of course, and that's on a Q-on-Q basis. So it's the usual thing about all politicians across all all countries, they always say, look at the size of our growth in our markets. Well, if you start from zero, it's pretty easy to grow a market, guys. Anyway, advanced GDP, 5.3%. Advanced GDP price index at 6%. Core durable goods expected to miss at 0.4%. Durable goods orders expected to drop by 0.6%. Unemployment claims at 260,000. Pending home sales dropping by 0.9% as the main takeaways from the 1:30 releases. And when we look at this as a narrative, we can start to recognize the basics. We can start to recognize the basics that we have got some very, very punchy numbers coming out. The punchiness of the Fed last night would suggest, of course, that they will be reasonably good numbers. The Fed already knows what this GDP number is going to be coming out as, and therefore, you know, if they know it's going to be missing by a fair amount, they would obviously be less punchy in the rhetoric. But they were pretty punchy last night. You would obviously have been able to take that from the comments, and obviously the impact it had on the bonds initially, the big sell-off on bonds, and that's what we can start to recognize. That's what we can start to recognize from this bit of business. So, you know, that's where we're at just now. Big numbers coming out, guys, so bear that in mind. The dollar still very, very strong on the back of the Fed. That's one thing that did stick around from last night, is the Fed is still very, very strong dollars. And you can see that very, very strong dollar narrative giving a strong positioning on pretty much all these markets. You can see a strong dollar pushing the euro down, even pushing the bullish pound market down as well. But the pound, I've been able to buy some sterling into these blocks this morning, good rally, and then we were able to buy sterling again into these blocks and another good rally. But the overall driver on the market is, of course, that strong dollar. When they're talking about 50 basis points, it's very difficult to buy any market against a strong dollar, isn't it? Very difficult. And obviously, when there's a risk sentiment in the background as well as a strong dollar, you've got to be saying, well, the dollar hasn't got any enemies at all. It's the favored currency. So we've got some risk factors in the background with Ukraine. Dollar's a natural buy in that situation, and we get a very punchy rhetoric on the interest rates as well. So there's absolutely friendless at the bottom edges in the euro so far, friendless. And the dollar getting all the business at the moment, the dollar getting all the business. So we can see that it's driven by dollars, dollar dominating everybody's thoughts, dollar dominating everybody's considerations at the moment. And yeah, we've managed to see at least some upside on sterling. The high betas benefiting from the risk tone improving with Russia's wind back on some of their negative, some of their strong war rhetoric, of course. That's allowed oil and equities to rally. It's also allowed things like the high betas to balance out, like the Aussie dollar and the Canadian dollar, allowing them to balance out a little bit this morning. And as I said, I quite like the discount that we were getting on sterling to buy at bottom prints, but I'm aware that we're trading against a very bullish US dollar. Obviously, that bullishness might be enhanced even further with a very strong advanced GDP print, and obviously a drop in unemployment claims, which is forecast at 260 against 286. So these are all things that can help this dollar become really quite strong again. And obviously with the rhetoric in Ukraine adding to that picture, we can obviously be very, very careful about trying to fade against the dollar at the present moment, because it does have a very, very strong case to be bullish, very strong case to be bullish at the moment. That bullishness might start impacting on higher oil prices in due course. You can see oil prices had a big ramp up here coming into 11 o'clock, 12 o'clock and through this phase here. And then all of a sudden we got the biggest volume of the day getting jammed on the oil, and that was it for oil for the time being, running into serious trouble. Top line prices. Remember we covered this in classroom the other day about big liquidity? Well, the liquidity never actually overlapped in oil at that stage. It actually kind of exhausted out through the top edge. But one of the things we did cover this morning was the concept of book divergence on a macro scale basis. We touched on it. We talked about it being part of the big class on Monday in terms of order flow. We're going to be trading in line with this. Well, take a look at what happened to the book. You might be surprised. We've talked about this already today. So you can see that the liquidity dropped off hard here. See that? See that big drop off in liquidity? Well, that opened the door to volatility, didn't it? Did you see that, guys? So when the liquidity drops off here on the offer side, it opens the door to volatility, surprisingly enough, and it breaks higher away from higher prices. If you don't recognize this, you've not paid any attention to yesterday's classroom. I'm sure I did mention exactly this point yesterday. Is there a drop-off in liquidity brings volatility into the marketplace? As they start ramping up the liquidity again, you can see it's all on the offer side. You can see it's all on the offer side into those areas, isn't it? All of it on the offer side. And that's driving this candlestick pattern to the downside and allowing you to start considering the fact that they're adding liquidity into these high prints. And obviously all you're trying to do now is find a high print, find a lean, and get your sell trade on the books. There it is. There's your sell trade right there. Does anybody not see it? Does anybody not see it? It's pretty obvious. It's right out of classroom. You see how easy it is to spot it, guys? I think it's easy. I think it's very, very crystal clear, in fact. I think there's absolutely no doubt in my mind that that's a sell trade. Obviously, nobody else does, okay? So I think I'm talking to myself today. Alrighty, so what else have we got for you? Nothing, so I'm going to grab some lunch and I'll be back in 10. Maybe people will show up for this afternoon's classroom.